Good evening. This is Doc Severson for the Theo Night Report for Thursday, September 28th. You know, it seems like no matter where I go these days when I'm looking for financial information, that the drumbeat is getting louder and louder and louder for a correction that is overdue. And I don't disagree with that. But my experience is that when you see everybody pretty much saying the same thing out there, that, oh, we have to have a correction. We have to have a correction. Again, I don't disagree with that. But when I read this stuff everywhere, when it seems to be pervasive amongst the financial media, usually this is where the market will do whatever is necessary to harm the greatest number of investors out there. So especially when people start to either take short positions or start to lighten up in their portfolio, whatever, anybody that takes this advice usually is the victim of what these guys are after. It's usually not until we get into true euphoria where everybody all of a sudden, you see none of this out there. You see nobody warning about this sort of stuff. That's usually where you have to worry about this. And I think there's a good chance that the market has got one more surprise up its sleeve at least before we're going to have to deal with this. Now, I can come up with all kinds of technical reasons why we should correct lower, but honestly, I've been calling for that for the past 6 months. So I'm just going to go with the flow right now. I mean, for months now, we've seen this exhaustion level on the monthly chart. We've never reached a level down here before, ever, that we can determine that we have not had some type of material correction from that within a reasonable amount of time. But we have just kept pushing higher and higher and higher through this entire move. But you also have to admit that these are extraordinary conditions right now where we have very, very low interest rates. There's really nowhere else for money to be at this point. Now, that could change in a hurry if rates start to raise, but based on the GDP readings that we're seeing, I think this is just a big bluff with the Fed saying that they may raise rates. I just don't know how they're going to possibly do that in the fourth quarter. So with markets awash in liquidity, with some countries still out there in negative interest rates, there's still only one place to be with investing funds. Now, again, like I said, this can change in a hurry, but for right now, there's nowhere else to be. This is where we're seeing every little microscopic dip along the way being bought. There's just no material corrections along the way. So at this point, and you can barely see any movement with the price way up here. Imagine what a 3% move would do. This is going to be 75 points, 75-point move to bring the S&P back into just a 3% move, which is going to kick things off, I believe, eventually to the downside and build a corrective range. I'm not calling for a crash here. I just think that we deserve to see the markets trade within a larger range with a bit more volatility in the near term. Of course, I've been saying that now for months and months and months, and nothing like this has happened because right now there's too much liquidity out there looking for a home. Now, what we've also seen is for the S&P, I've talked about this exhaustion signal on a daily chart, and the daily chart has done what it's supposed to do. It's basically consolidated for almost the last 2 weeks, kind of sideways here. And it's about ready to go again. We've seen the energy recharge. We have a lot of energy at the weekly chart. The S&P looks like it's ready to break out again. It's clearly above 2,500. There's no overhead resistance right now. It can do whatever it wants to do. So I'm going to look for any what I call whale setups. Now, a whale setup is where, if you think about the analogy here, whales are generally underwater the majority of the time, right? So they're swimming around down there, but they're mammals. They have to surface every once in a while. And so they'll do so, and when they surface, they create a big splash, don't they? So you don't see them, and all of a sudden, boom, they're gone. So this is kind of what we're looking for with these stocks that are maybe in a heavy consolidation zone and have built up a lot of energy. So here's an example of like eBay. Now, I don't like the setup for eBay because you have to take this thing into all-time highs. That's one of my rules, is that I don't like to do that. I like the setup for Google. I think the Google setup is great. However, the problem with Google is the options are just so large. The options are just so large out there that if you're looking for something where you can get a reasonable amount of time, Look at the spread width out here. This is just like trading the SPX. 2.5 point wide, but look at the spread width on there, $3. So if you do something like this, if you trade a vertical spread for 2.5 points, you would expect to pay maybe $1.25. Midpoint, it's $1.45. And a lot of that is to the volatility skew, everybody buying these out of the money puts and just completely skewing the option chain. All right, so we keep on shopping then. So Google, even though it's a great setup, I don't like it. I like IBB a lot. This is a really nice little flag pattern here showing a potential breakout from this. So I like this one a lot. Plenty of room to run on this one. Lowe's is actually showing a nice breakout as well, too, to the upside. So we're seeing this change in polarity with higher highs and higher lows. Looks like it wants to break out. Again, a lot of energy at the weekly and daily charts, and plenty as well on the monthly. So this is a chart that has done a lot of consolidation, a lot of sideways movement here, and is ready to move. Some of these, like Las Vegas Sands, another good pattern. It's a good one. MGM, a couple of casinos. Big, wide consolidation pattern. A lot of room to run on this one. Even the spiders is showing a potential whale trade. So the spiders, the S&P 500, showing a potential whale trade here. Western Digital, I like this one a lot as well too, because this is showing, it depends on whether you call this a pennant or a symmetrical triangle pattern, but this is either way a big consolidation pattern coming up to the apex, squeezing into this area with a lot of energy. This thing is going to move very, very quickly. So what I would say is just mark down, wait for the breakout to this. The odds do favor this to break out to the upside, especially when you have this much trend in this direction, this much trend. All the larger time frame trends are still heading to the upside. So that does increase the probabilities of an eventual upside resolution for this one as well. Here is Williams Company's pretty sloppy chart. Would not be interested in that one. Here's another casino operator, Wynn. Nice little flag pattern setting up here, a little consolidation pattern up here. Look for the breakout of this one. Again, the way that we're trading these is to go out maybe 30 days in time and then trading an at-the-money spread. Then at-the-money spread to be able to neutralize some of the undesirable Greeks that we're looking for. Again, still somewhat expensive for a $1 wide spread here. Is going to cost 58 cents at the midpoint. So I'm going to spread this out just a little bit wider here, 145, 147. And this one doesn't look too bad. We can get into this one for about or less than $1 debit for a $2 wide spread. And then finally, we're coming to XLY, which is the discretionary ETF. This one, again, not too bad here. Another triangle breakout if it gets above 90. For this one, and it's got about 2.5 points to run before you have to push all-time highs to secure your profit. So you should be able to get a pretty decent return on that breakout if that does occur. So again, this is where, even though I'm very concerned longer term for the health of this market, I think it desperately does need a correction. The market doesn't necessarily care what I think, nor what I think it needs for it. It will do whatever is necessary to cause the greatest amount of harm to the largest cross-section of traders out there. And if that means continuing to go higher to the shock and awe of all the troops that are out there, then that's what it'll do. And who am I to argue? If we have a bullish setup, if the market is breaking higher, I'm just going to simply hold my nose and take some of these setups long as well too. It is cool to be bearish, but it's also sometimes more profitable to be going with the trend. That is it for today's report. Thanks for listening, and we'll see you tomorrow.